So again, we mentioned futures are under a bit of pressure right now. What's your word of the day? How do you see today shaping up?
Yeah, our word of the day is rates. And I know we've actually been talking a lot about this on the show already, but where interest rates are heading, I think is going to continue to be a large story here. And despite the fact that the Fed has started these supersized rate cuts, Treasury yields are actually markedly higher despite that. And I think what you need to realize is the fact that bond markets speak just as loud as the Fed, if not louder. So while the Fed is coming in lowering rates, saying we've got inflation under control, the bond markets are telling you a different story and saying you actually might need to be worried about inflation over the longer run as you look at the 10 and the 30-year Treasury, which continue to rise. So keep an eye on this story. I don't think it's ending anytime here in the near future. And you do want to make sure as an investor, you are positioned accordingly because inflation does end up being a little stickier here. You need to make sure you have some of those inflation hedges in your portfolio.
Okay, so while you're watching inflation, again, we do get PPI coming up later today. We're just showing the 10-year chart. It's about 4.09. I was looking down at it. At what level do you think that becomes, distressful when it comes to the equity market and makes bonds just flat out more attractive?
Yeah, I don't think this is necessarily at concerning levels, but I think what you need to consider here is the fact that the yield curve is normalized, right? Which I think that is a better thing for businesses. The fact that you no longer have the inverted yield curve, but the fact that that longer end is steepening is the idea where you want to have some of those things in there where think back to 2022 actually outperformed when inflation kicked in. So think of like energy actually tends to do well in that environment. You're seeing commodities are up over 8% over the last 4 weeks as you're starting to see those yields rising. And additionally, you want to look at some of your high dividend players. Those actually tend to be a really good inflation hedge. So I don't think this is necessarily a bad thing for the markets. You can just start to see other areas outperform. So we are of the idea that you're going to continue to see a broadening or kind of that everything rally. But if inflation kicks in, some of those areas might outperform. Make sure you have those in there.
Very quickly, I want to make sure we save time for your picks, but actually Bill Gross came out yesterday with a list of stocks, kind of a similar theme to you. There's a lot of possible volatility with the election. He named a REIT, a close-end mutual fund, some things like that. Do you agree just with that thematically, that it's time to get a little bit more defensive and look for ways to protect yourself from volatility?
Yeah, and it's actually been kind of an unvolatile year. I mean, we tend to have a couple 5% corrections in any given year and at least a 10% correction every 12 months or so. Really, we've had like 2 big corrections this year, but as we lead up to the election, I don't think it would be that out of the realm of possibilities to start to see some of that volatility kick in. And is that something I'm worried about? No. I think if so, you want to take advantage of that as a buying opportunity. But keep in mind here, the election actually tends to be a good thing for the stock market. So if that volatility kicks in, it can be an opportunity to take advantage of. It's nothing to be fearful of, but we haven't had much of it. So I wouldn't be surprised to see it come in.
All right, I want to talk about your picks. You gave us a bunch of picks. One that you and I we chatted about on the phone about was your pick of the small caps. We're going to look at the small caps over the last week. They're actually down 1%. Following that stronger than expected jobs report showing that the economy is strong, there's strong wage growth. Shouldn't that have boosted the small caps? Why do you think they're trading lower, and why are you still so optimistic?
Yeah, and this is, I think, one of those trades I think everybody's a little optimistic on. So I think maybe some of that has become a little bit crowded. But I do believe that as the Fed is lowering interest rates on the short end of the curve here, because you are actually seeing that the expectation of rate cuts actually increased after some of the data yesterday, which I think a lot of people did find surprising. But because of that, those lending rates are actually going to be affected more in the short term of the curve for your small cap companies, which actually should benefit them.
Courtney